The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
At Big Iron Auctions, customer satisfaction is our #1 goal. As the 40-year leader in auctions for agriculture, real estate, livestock, construction, and transportation, we are here to serve you. Big Iron will handle everything from start to finish. From meeting with you, to prepping your equipment, writing the listings, and collecting buyer's payments, let us do the heavy lifting for you. We love our customers, and we treat them like family. There's a Big Iron sales rep in your area, so let's get together. To learn more, visit bigiron.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Marks of Shawn Hackett. Shawn Hackett is with Hackett Financial out of Boca Raton, Florida. It's nice enough to come on and talk about what's happening in the world of commodities. Shawn, how you doing this morning?
We're cool. Our first temperature's under 60 degrees, so I know, your prayers are appreciated.
Yeah. I say this a lot on here when Shawn talks about weather in Florida. It's all relative, right? And 60 degrees most places right now would be an extreme high, but in South Florida it's the low. So
well, after experiencing 6 months of 92 degrees and 101% humidity, when it does get under 60 and it's dry, I can tell you are chilly down here, based upon
all things considered, right, Shawn?
Based on what your body's accustomed to. Now, I will be entering South Dakota here in early December. We're looking at potentially some record-setting colds. So if you think I have it good, I am actually going to have to deal with something a little more sinister. So I'm sure everyone's going to enjoy that. I will actually, appreciate and bask in such incredible, beautiful winter weather. So
right. The good thing about your basking in winter weather is just for a few hours, and then you get to go back. So it's not a permanent thing for you.
No, and that's what keeps me going, because I know it's 3 days or 4 days, and then then I'm gone. So yeah,
got to stay hard, Shawn. Got to stay hard.
I got me on my fun hat. Going to cover my ears.
There you go. South Florida and South Dakota are two completely different climates, in case you're wondering.
Yeah, that's what I heard. I heard.
So both have South in it, just different altogether. So. All right, Shawn, a lot of stuff going on. This commodity market that we've been in here for the past, I don't know, probably 9 months, probably. I guess the best way to put it is it's an on-again, off-again thing where you don't get it feels like if you get a good week, the next week's going to be a down week. And then if you're just going to go back to the following week, is going to be another good week. We're in a good week this week, and you can tell the hesitation in the market, right? Because it feels like, all right, we had a good run. Let's take our profit, and then we'll see what happens, and we'll play on some bad news or whatever it is that we're hearing, and then we'll come back the next week, and there's some bullish news, and we'll come back in there, and then the report comes in, and the report's not as bad as we thought it was going to be. So now we're going to run that back up, and then we're going to take our profits. So it's a very cat and mouse game that we see in the marketplace right now. As you look at this, kind of walk through that and kind of give me your 2 cents on maybe some of the mentality that you're seeing in the market right now.
It's just very hard for the market to want to take, let's put it this way, markets that the U.S. exports a lot of. It's very hard for the market to say we're going to take those prices higher ahead of President-elect Trump getting in office, with all the uncertainties of exactly what is he going to do, when is he going to do it, who is he going to do it to, what products is he going to do it to. No one really knows. I mean, we just don't know. What we know, there could be some positive things out of that. There could be some negative things. But when you have such a high degree of opaqueness, you're just nervous. You're nervous on the short side. You're nervous on the long side. So you get these quick rallies, these quick declines, and like you said, it's just markets that are kind of flopping back and forth, being very short term opportunistic, unless there's just a weather story that's overpowers that, or there's just something else going on. Like coffee, we're just running out of coffee, so coffee's running up. But we don't sell a lot of coffee here. We're not an exporter of coffee, so that's why I'm trying to say it's very important. The markets that we don't export a lot of are doing just fine, but the ones we do are not doing as well. And I think you need to separate those we export, those we don't, because the market's trading those markets very differently based upon a Trump presidency or lack thereof.
Yep. It'll be interesting to watch to see what happens, because there's from the ag side of it, there's a lot of articles out there that show, hey, if he does go back and do this, it could be favorable for some of the ag stuff. And then you go read the next article about it, and it's not. Well,
here's a great. So we know that if this guy that's coming in for the EPA, he's not the most supportive of biofuels. Okay.
Right. Yep.
But a Trump tariff policy would absolutely 100% likely eliminate or reduce dramatically the importation of foreign feedstocks that make renewable diesel and ethanol, which would be very, very positive for domestic demand.
Yep.
Then you say, okay, you have RFK that says, I want to do away with seed oils in our diets. Just get rid of it. Well, that's terrible. That would be very, very negative for the soybean complex, especially. At the same time, he's saying we want to do away with pesticides and most fertilizers, which would be very positive because it would reduce the yields that we could have. So you could take. There's so many balls that you could take back and forth. It really comes to and with Trump, is he just going to come in and say tariffs on everybody? Is he going to put a timeline out? Hey, I'm going to give everybody a year to cut a deal with me. If you don't, this is what we're going to do. if he does that, I would say that's positive because he's probably going to cut some trade deals that actually we saw the last time when he cut the trade deal with China. It was, we took off. So it's not all one or the other. I know that, the paintbrush has been, it's all negative, but it really isn't all negative. And it really comes down to when, how much, and to who. And we really aren't going to get a handle on that. The first thing he's got to do is got to get his cabinet approved.
Right.
Which may take a little while. And once he has his cabinet approved, then he has to go about laying the foundation out of what's going to happen. So I just think if you're going to get a larger rally in grains or cotton or those things that we export a lot of, you're going to need to get Mother Nature involved to override the fear of the negativity, the negative side of the aisle, and that's really, to me, how you get more upside than the upsides we've seen up to this point, Casey.
Yeah. The whole soybean thing with renewable diesel is one of those things that I did not know. It took 4 months ago is when I finally maybe pieced everything together or finally figured it all out. But the amount of used cooking oil that comes into the United States for biodiesel because of regulations and those kind of things that are in places, and palm oil and those kind of things that all show up. If that was just taken out and then we just simply used our soybeans to do that, offset that, we would have we would have basically used up our supply of soybeans that are out there. I mean, for the most part, it would be a huge dent come out of that. So that would be on the world marketplace. There's hardly the supply that's taken out of that completely transverses the ability or the amount of dollars associated with that. I mean, from what we see now,
we think that's the biggest thing to watch.
Yeah.
We said in our market to market interview on Friday, that's one of the big things that we think is I think that's, if we're trying to guess what's going to happen here, to me, that's the most likely outcome to bet on, is that we're going to prevent, with his policies, foreign feedstocks from coming in and competing with our domestic feedstocks for making biofuels. I think that is a highly likely outcome. A lot of other outcomes, maybe it's a 50-50 shot, but I think that is a highly likely outcome. And at least for the first year of his presidency, it's probably going to be the bigger driver of soybeans than worries over what RFK might do and other things that might be more in year 2, 3, or 4. You know what I'm saying?
Right.
So
yeah.
you start sourcing canola oil and bean oil domestically to replace a lack of imported vegetable feedstock, oil feedstock for renewable diesel that's already being produced. I think it's 5 billion gallons plus. It's a game changer.
Yeah.
It's a game changer. So anyway, that to me is really, if you want to be constructive, soybean complex and soybeans, to me, that's how you overcome the fact that we have a lot of soybeans in the world right now. And other than weather, of course, that's to me is the reason to be constructive soybeans at this current price level, despite large stocks, because those large stocks are assuming we're not going to see these imported vegetable oils go away.
Yeah.
If those vegetable oils go away, then the whole balance sheet immediately changes. And we already found out the crops coming in considerably smaller than we thought. I mean, and we may see further reductions in yields still yet.
Yeah. Yeah, that'd be interesting to watch how that plays out, because that's a huge game changer, because that's one of those, high tides raise all boats type of things, and that would, obviously if soybeans go up in value, so is corn, so is wheat, so everything else.
And one of the reasons I think that a lot of foreign vegetable oil and cooking oil has been allowed to come in is, but the Biden administration had an inflation problem. They were trying to keep prices down, and of course, one way to do that is to prevent soybeans from going up.
Mm-hmm. Right.
Secondly, because Biden was very big on the carbon footprint, and they deemed that the carbon footprint of bean oil is not as good as the carbon footprint of, palm oil and other competing vegetable oils that they wanted to. They were pushing for better carbon footprint vegetable oils. Whether one agrees or disagrees, that's not relevant. Obviously, Trump doesn't feel as strongly about carbon footprint as Biden does, and so to me, it's a natural thing that he would want to. First of all, he wants to. One thing we know about his first presidency, he does want to support the U.S. farming industry. Now, he has some of his policies may not be supportive, but he wants to support. He may not be able to get away with subsidies this time like he did back then because of our budget problems, but he certainly could support the biofuel industry. To me, it's a win for the domestic farmer. It's a win for domestic demand. It's a win for supporting the farmer. And it sounds to me like a very quick way that he could help support the farmer at a time that he might be doing some things that could be some headwinds. So I really, when I think it through, that to me is really probably the big story of 2025 is sourcing domestic North American vegetable oil to make renewable diesel versus not. If we do that, the grain markets are going to be just fine.
Yeah. So interesting to watch how that plays out because again, that's a huge,
massive.
Yeah, massive is probably the best word to use there.
Massive change.
A massive plug would come out of the funnel there, so it'd be a big change in what we're looking at.
Yeah.
All right, let's bounce over here. Let's talk a little bit about cotton. Cotton has gotten it's been a rough year for cotton, and if you're looking at the cotton market right now, Shawn, you see some declining things. A lot of cotton right now also is hinging on obviously exporting those kind of things to China. You did see China come in and buy a bunch of cotton not too long ago, but it's not really been going gangbusters by any means lately. Farm Bill kind of hinges is kind of being it's kind of hampering a little bit what we see with cotton production and the profitability of farmers and those kind of things. But I guess as you're looking at or lack of a Farm Bill, sorry, as you're looking at cotton right now, what are your thoughts as we head into the end of the year and into 25?
My belief is, if you look at the cotton price, I mean, it's just been trading listlessly at this 68 cents to 70 cents for forever. Even the crickets fell asleep. It's been such a boring market. But I do believe, and it may take a little bit, but I do believe that the Chinese have decided that they're going to reflate the consumer side of their economy, not the property side, not the capital investment side, but the consumer side. I believe they've decided they're going to reflate that by increasing the stock market, helping consumers out with handing money to them, giving them all kinds of breaks. 1.4 trillion US dollar equivalent was announced a few weeks back that they're going to be pushing in, and there may be more behind it. It will work. May not work for the long term, but it will work for the next 1 to 2 years if they put that kind of capital in. That's some serious money, some serious dough. And I don't believe that if Trump gets into an immediate tariff scenario with China, I don't believe that China is going to target cotton in terms of they really don't have anyone else to buy the kind of quantities that they need and the kind of qualities they want. There's really no easy replacement for U.S. cotton. So that would be a particular market that I think that they would be willing to keep off a retaliatory list of corresponding tariffs should Trump decide to, immediately do something with them. So I think the risk there is not as great as it would be for soybeans, which they can easily source out of Brazil. We know this,
sure.
Or other markets, that they can, whether it's pork or we know they can source a lot of other products elsewhere, but they really can't do cotton. So I'm not worried about a Trump tariff for cotton as much as I am. We just need to see the Chinese economy and the Chinese consumer start to do better. And we are actually seeing. Forget what China reports. I'm talking about independent, private companies, and we're starting to see some life in the consumer market in China. So I am optimistic. I'm not predicting any wild, crazy upside scenario in cotton, but I do think that we can seed prices on a demand-driven market from China, rise from where we've been in the 70-cent area to more like the 80-cent area. Not going to set the world on fire. Not the biggest move we've ever seen, but at 80 cents, the U.S. farmer is profitable. And I think that's what you have to focus on as a producer is, look for that window of opportunity that I think is likely to come, and make sure when you get that opportunity to make sure you sell it, make sure you cash sell it, you bring that money home on the farm. So I'm pretty constructive the cotton market to that extent. I don't think we can make ground much higher than that. I just don't think China's economy is going to do that well to allow for them to chase the market higher, but I think it will do well enough to at least give the farmer a chance to pencil out a profitable year.
Yep. So let's jump over and talk a little bit about what you see happening in milk. Milk had a really good run, above 21, 22, 23 in some cases, and here of late we've seen it slip back under 20 in the $18, $19 range. So I guess, Shawn, as you're looking at milk, your thoughts there and some of the headwinds you see ahead of it here.
Yeah, we've been very worried about fourth quarter, first quarter prices for a long time. We recommended to our customers, our producers, to get themselves either cash sold or use the government-supported DRP program that to lay a floor under the market, and that's when like Class 3 was closer to 22-ish, and obviously the market's collapsed into the 18s. We think most of the decline is probably behind us. I think we're going to be entering more of a sideways trade with maybe a little bit of a downward bias into the first quarter. The big issue is this. We had this big run-up on avian flu worries that this was going to crater U.S. production. And yet, although it certainly didn't help U.S. production has continued to actually grow through the worst of the avian flu. And now the avian flu is in the rearview mirror. We're coming out of it. We're going into the peak production part of the season in the spring. And the market needed to recalibrate lower the fact that production is going to be better than thought. And so that's essentially where things have gotten to. And it doesn't mean production is just going to take off from here. There's a lot of other reasons that it won't. But 22 milk price with a corn price under $4 cash and a soybean meal price under $300 per ton, that's quite a spread between the two. And rarely do you see those kinds of feed prices at those levels and a $22 Class 3 milk price. In fact, it was one of the wider gaps we've seen in a long time. So now we're recalibrating. If I'm correct that grain markets are going to firm and we're going to see higher feed prices into the spring, then like I said, this $18, $17.5 to $18 area, I think is going to be an area that the market should find enough demand to keep itself together. But I'm not, but by no means am I really too excited about this market until probably the second quarter onward. I think from now till then, it might be like the cotton market. We just go sideways with a little rally here and there, but not much going on. So the big breaks occurred. We kind of got that right. But for now, I think the worst is over. And if I'm a producer, I certainly wouldn't be wanting to sell here. I think this is a time that, a physical buyer of milk, might be looking at extending coverage and giving themselves a little better position over time.
Yeah. Okay. You brought this up this morning because we were talking about the frigid conditions in South Florida. The cold weather's coming, and you talked about this a lot on the podcast here. 2-3 months ago, you started talking about, hey, we're still thinking that late November, early December, into December, that we're going to see a cold snap come, and it's going to be fast and furious, I think is the word that you used during that time frame. And then you see a bit of a bereavement going through January, February, and then March and April again. You would see another big blast of cold air come through. Which is March and April aren't the best time to get huge amounts of cold air to come through with planting season going on. But you started talking about natural gas and the explosion that you saw there. So two-parter here, Shawn. If you had talk a little bit about what you see weather-wise coming in December, and then talk about the natural gas and where you see that is and the effects that you see that having on, I know a lot of guys probably got a lot of inputs locked in already going into 25, but you see a rise in natural gas, you're going to see a rise in fertilizer costs too. So I guess talk a little bit about those two things.
Well, I mean, obviously our forecast is starting to verify. I think natural gas is up almost $1 here in the last week. Everyone was blowtorch, and this is what happens. And they never see the cold until there it is. Let's revisit why we were bullish cold weather first half of winter. First of all, we're at the peak in the 11-year solar cycle. We have a positive quasi-biennial oscillation, which are the upper stratospheric winds that oscillate back and forth from east to west, west to east every 26 to 32 months. They're positive. We're in a neutral, negative sea surface temperature regime in the Central Pacific. And we have high Siberian snowfall, northern Siberian snowfall, along with a high correlation between active Gulf of Mexico hurricane seasons leading to a cold first half of North American and European winter. That was what we forecasted several months ago, and we are starting to see that it looks like it will be a top 5 cold December. We do think that it can carry over into the first part of January. And then we define winter as December 1 through the end of February. That's our definition of winter. So from mid-January to the end of February, we think it could be really warm. And so this natural gas move, is going to, it's going to have a lot of volatility to it. But we are very, very strong on the idea that after blowtorch back half of the winter, March into mid-April is going to be very snowy, very cold. And we feel the same way for Russia, Ukraine. And we think that both regions have, once again, elevated risks for frost. It doesn't mean both areas will get frost, but it's highly probable one or both of the areas will have a major debilitating March, April, maybe even early May frost. Last year, Russia, Ukraine had a 2-day frost, one of the worst frosts in 50 years. The U.S. barely missed it, but that's going to be a big thing to watch because it's going to have a big impact on winter wheat production potential, winter wheat prices, and obviously it's going to damper an early start to the planting season, meaning we're going to push the planting season out into the latter part of the second half of the spring. And not that guarantees a problem. It just means we're just not going to get off to a fast start, and the market will get worried about that, especially if some unfavorable dry weather starts to come into the mix as we get into the to the growing season, as we expect. This particular growing season will be a much drier season than the one we just had, because it's not going to be a La Nina to La Nina or La Nina to El Nino. It's going to be a stable state, neutral, negative ENSO condition, which allows for a much more stagnant, stable, drier pattern to develop and remain through the entire growing season instead of being more bifurcated like we've seen the last 2 seasons. So that's really the setup here. Longer term, however, Casey, on natural gas, understand this. Artificial intelligence is demanding massive amounts of increase in electrical power capacity. And the majority of all that electric power capacity is coming in the form of natural gas-fired electrical power plants. And the growth in the need for electrical power from artificial intelligence, centers that process all of the AI information, the data centers, is exponential. I mean, it's beyond belief what is needed and how much natural gas demand is going to grow. And everything that I see, at least at these price levels, the last year, Casey, U.S. natural gas production is down. So we have exponential growth in the need for natural gas powered power plants, and they're coming online left and right, yet our production is down. That's not what's supposed to happen. You're supposed to be seeing this demand coming and help support that by increasing the natural gas supply. Well, the only way I know this ends with natural gas prices having to price at a higher level in order to rebalance the marketplace. And so while you'll get short-term big spikes and big falls because of short-term weather, the long-term pull here over the next couple of years means natural gas prices need to go higher. And that means that nitrogen-based fertilizer prices in aggregate need to go higher. And that's really what I believe the long-term forecast. So when you have an opportunity like we had a month ago in natural gas when it was being given away, you need to do something to lock that in. Now the prices have taken off. It's not the right time to be locking them in. We're going to get a big break. If I'm correct about the forecast, you're going to get a big back half of winter crash in natural gas prices. I don't think we're going to where we were, but we're going to get a big knockdown. There'll be another opportunity. You need to keep looking for those opportunities in the short-term trading of natural gas to position for the long-term demand pull to higher prices. And that's really, I think, the bigger story, the bigger trend is physical buyers of natural gas, of propane, of nitrogen-based fertilizers need to be opportunistic when the opportunities arise, given the frenetic short-term trading of natural gas. Just use it to your advantage because the long-term pull is not going away. AI is not going away. These data centers are not going away, and the demand for electrical power is not going away.
Yep. Okay. All right, Shawn. Good stuff as usual. Folks want to reach out to you, get more information about what it is you've been doing over at Hackett Financial. What's the best way to do it?
Our website is Hackett, Hackett, advisors.com. Twitter page is at Faradix11. Plus, we have a LinkedIn page. Obviously, from time to time, we'll put interviews out that we do with you, with Market to Market, with Chip Flory. Some other tidbits we go out there about our statistics, cycles, and correlations, so that those are interested the way we look at the markets may be able to extract some value from those that watch and listen to your show.
Right on. All right, Shawn. Well, make sure you keep all your exposed skin closed and covered down there, and don't get frostbite down there in South Florida. Okay. Appreciate you, Shawn.
Thanks, Casey. Really appreciate it.
Right on. Casey Seymour, Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. You can find me on the video version at the YouTube channel, which is the Moving Iron Podcast YouTube channel. You can also go to TikTok at Moving Iron Podcast, as well as the movingironllc.com website, where you can find everything that is Moving Iron related. So with that, I am Casey Seymour, Shawn Hackett. Let's go some iron, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment, like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving